Okay, let's get reaction from the analysts. Gil Luria, D.A. Davidson, Managing Director, joins us. Gil, whether it's to what you just heard Jensen Huang say or it was in the numbers that you saw, what is your big takeaway of the last couple of hours?
That add this result to a long list of accomplishments from NVIDIA. The fact that they can exceed expectations for the quarter and guide for sequential revenue growth, while one of their biggest markets, their second biggest market, is really frozen, is very impressive. And that's why the stock's up after hours. This isn't as bad as it could have been, considering the fact they had to stop selling H20s on April 9th into China and had to write off a substantial amount of inventory. So that's a significant accomplishment. The other takeaway, though, is the company's been very careful in how it's communicated this message, but let me make it a little bit more clear. We are currently frozen out of China. And if we remain frozen out of China, that's going to have a material negative impact on the results of the company, which is to say, they probably will not be able to accomplish the goals that the consensus estimates have for them for next year if they can't get back into China. So they are actively lobbying the administration, the U.S. administration, to find a way to be able to return to the Chinese market. And that seems to still be a negotiation. That's why the company is so effusive in talking about the administration. That's why the company is so clear about their reasoning for why they should be able to sell into China and how negative it would be if they are not able to sell into China.
Gil, stay with us. I want to bring in Bloomberg Intelligence senior analyst Kunjan Sabani to the conversation. You've published your React document. You have your model and your numbers, but you and I both agree the big question was, where did the makeup come from on the demand side? Where did they sell to, noting the $8 billion lost revenue opportunity out of China?
Yeah, if you unpack the numbers and put the H20 impact aside, this would have been a blown out quarter where they would have beat the result and the outlook by 7% and 10%, which they have not done in the last 5 quarters. What this means is, based on our math, that Blackwell did $3 billion above expectations. And remember, Blackwell expectations were not brought down, both in 1Q, 2Q. That's significantly important. Having said that, China loss is a real revenue loss, but relatively so is it closed for most of its competitors.
I asked Jensen Huang, did Blackwell make up the shortfall? He said, I guess so. What's next? What happens for NVIDIA in that key market of China?
I mean, the one thing we were expecting them is to announce the new chip or any clarity around that. So I think that was the only negative out of today's call, that we didn't get that. So might create some room for uncertainty and, rumors or speculation when it comes to numbers going forward. But the other key important thing we saw today was that gross margin, again, taking the H20 ban out, came in better, which means the Blackwell yields and cost improvements are running better than we anticipated.
Gil Luria, final word to you. What happens next for NVIDIA?
We need to get clarity on what are the restrictions of selling chips into China. And given those restrictions, what is the product that NVIDIA can sell into that market? And how does it stack up against the Huawei product? I think you got Mr. Wang to acknowledge that the Huawei product is now caught up to the H200. So if all NVIDIA can introduce into that market is a product that's not as good as the H200, they probably have lost a significant part of that market. We need to get clarity on that. I would expect us to get that clarity in the next few weeks and months.
Gil Luria, D.A. Davidson, Managing Director, along with Bloomberg Intelligence Senior Analyst Kunjan Sabani. Thanks to you both.